Okay, welcome. I'd like to welcome Dan Gough to our conversation today. Dan works with Patriot Home and Auto Insurance, who is someone that we refer many of our clients to. As you know, during the home purchase process, it is required that you get insurance. So we make it really easy by working with Dan. With Patriot, they are an independent insurance broker, so they can shop around policies for you. Dan, why don't you tell us a little bit about Patriot and why it's important to have an independent broker?
Yeah, Katie, we'd love to give a little insight on that. So at Patriot Home and Auto Insurance, we have contracts with about 20 different insurance carriers, which is really important right now. Anybody who just Googles the insurance industry can kind of see that insurance companies have lost a lot of money over the last couple of years. They're impacted by inflation, prices go up for the average claim. So, they just couldn't project for that. So a lot of insurance companies are taking really big rate increases, or some of them are even shutting down writing new clients. So when somebody's getting ready to go buy a house, it's always good to work with an independent insurance broker who can shop through multiple carriers. If I have 20 carriers and two of them say we're not taking new clients, or two more of them might say we're taking really big rate increases, well, that still leaves me with 16 awesome A+ rated insurance options. And out of those 16, we're going to find a good fit for any client who's pretty much looking to get a policy. Another part of it is insurance rates go up, mortgage rates are going up. So, everybody's looking at the monthly payment on a new house. We do it all day long where we save $1,000, I'd say $2,000 on just home insurance for a client. It's a big deal if you're looking at $100 or $150 a month savings on home insurance, versus if you just go to one exclusive carrier that maybe you've been with or somebody recommend it and they give you that price. If we can cut it in half, it's a really good thing right now for cost savings.
And Dan, when they are getting their homeowners insurance, is there potentially more savings if they decide to bundle like their auto and umbrella policies and other things? Do you shop all of those as well?
Yeah, so there's a couple of good, that's a good question. A lot of the insurance carriers go from like 10 to some of them offer 30% discount on bundling. So if you're looking at a policy that's just for an easy number, $1,000, if you add the auto in, that could reduce that home premium down to $700. Obviously, if that gets bigger, you can go up to $2,000 policy. That could take, $400 off or something like that, or $600 off of some of the carriers. So it's definitely a really good savings. And then you get the savings on the auto as well. As I kind of mentioned, a little bit of turbulence in the insurance industry. Some carriers only write bundle packages right now because they want to have the whole package to kind of offset some of their risk and bring in a little bit more premium, instead of just writing one or the other, the home or the auto. So it opens you up to more options for sure as well.
Okay, great. So getting back to the home purchase process then and getting insurance there, I know there are other ways to save money, like by changing the deductible and the coverage limits. So what does a buyer need to be thinking about? How do they decide how much coverage they need and how big of a deductible to take?
Yeah. So the first portion, the biggest factor on a premium or the house they're buying is the dwelling coverage, which is the structure itself. It doesn't really have much to do with the value of the house. So we get asked a lot, hey, I'm buying a house for $1 million and, we only need to put $600,000 in coverage on there. Insurance is covering the house for damages to the physical structure, or even a replacement of the physical structure. So if God forbid there was a total fire and the house burnt down, what is it going to cost to clear everything out and rebuild a house at a price per square foot? So the insurance companies, they have estimators. We plug in all the information. It comes over from public records and they kick out a number with a price per square foot. It can change depending on different locations. And then that's how much the dwelling coverage is set for. And then we put on just about every policy, unless somebody really doesn't want it, which most people want it right now. We put on what's called a dwelling extension. So that would be like a 50% extension of the dwelling. So you really have, again, if you had $100,000, it would be $150,000 in coverage. And what that does is Here's the set price we think it's going to cost to rebuild. We're going to give another 50% on there with this endorsement, just in case the prices keep going up to rebuild or repair something, and we're a little bit under budget. You've got a huge cushion there. It's a lot of coverage for like $40 a year. So in the grand scheme of things, it's well worth it to have, especially in the kind of pricing that's going on right now with contractors and building and whatnot.
Okay. Any other riders or supplements that you recommend to people? Things like sewer line backups or floods?
Yeah.
What else do you have?
So same thing. I mean, sewer backup, right? A sump pump failure or a drain backup in the house. We put on about $10,000 in every quote that we have. Somebody can decide if they want to take it off, if they want to increase it. But we like to put at least $10,000 in coverage on there. Depending on the carrier, that can cost $50 to $100 a year. That's probably the most common claim, right? Power goes out, heavy rainstorms are going on, sump pump fails, and you get a couple of inches of water in the basement and a carpet or a floor needs to be replaced for a few $1,000s. That's the most frequent claim that we see across the region for sure. So it's definitely well worth it to have that on there. Most of the carriers, not all, but most of them also offer underground sewer and water and utility line coverage. So if you had a sewer line leaving the house going to the street and it had an issue and it was damaged, they don't actually cover the replacement of the line, but what they cover is excavating everything to get to it and then putting it all back to the way it was. So we usually put on about $10,000 in coverage as long as that carrier that we're working with offers it. So this way, if you had to dig up a driveway or a front lawn, it usually falls within that. It's a relatively new coverage in the last 4 or 5 years for home insurance carriers. But we've seen a bunch of the claims and clients have used it. And I'd say the average is between $5,000 and $6,000 of coverage needed. So it's well within range. And again, that's another one that's like $30 or $40 to put onto a policy. So if you're spending, I don't know, whatever it is, $1,200 a year on the home insurance, to add those coverages on for another 100, 150, they're more likely to happen statistically than a fire in a house, where the house needs to be rebuilt. So it's definitely well worth it to have those. Flood insurance is totally separate. So we can't put that on a home insurance policy. We do work with FEMA. We do work with private flood insurance carriers. If somebody's in a flood zone, they're probably going to be required to have it from the mortgage company. We have, I don't know, 6, maybe 5 or 6 different options for flood insurance. And then over the past couple of years, I'd say flooding's gotten a little worse. So more people call us up and they will buy a policy that's not in a flood zone just to have it in case something happens. Usually something like that is depending, maybe you can do a high deductible. That would be like $400 or $500 a year. So some people it's worth the cost.
Okay, let's switch gears and talk about condos, because condos have their own master policy that's part of the condo fee, but they also have to get their own insurance policy. I think it's an HO6, is that
Yep.
right?
Correct.
Okay, so what does that cover? About how much does that cost? What other things do condo owners need to be thinking about?
Yeah, so for a condo, I don't know, I'd say probably between $300 and $400 for the year in coverage. We put on, starting with the dwelling coverage, most masters policies, not all of them, but most condo master policies cover even the interior of a condo for a damage from like a fire or something like that. A mortgage company is going to require 20% of the appraisal value of the unit to be as the dwelling. So if you're buying a $100,000 condo, you're going to need $20,000 in dwelling coverage and going up from there. With the master, but that's also important to have anyway, because what the master policy doesn't cover is upgrades and additions to the interior of the condo. So if a unit owner, from the time it was built till the time somebody's living there today and files a claim, has redone flooring or redone nicer countertops or cabinets or bathrooms or whatever they do to upgrade the condo, if there's a claim, the master policy is only going to pay what it would cost to put it back to the original amount of what was inside of the condo. So it could be, cheap countertops versus granite countertops. So it's nice to have that dwelling that would then kick in and extend that coverage. The second part would be liability coverage. It's pretty inexpensive, but if somebody's hurt inside of the condo and they sue somebody, right, whether they're right or wrong, a lot of people get sued today. The insurance company will defend the client and pay out, any judgments against them. The liability coverage also covers if a unit owner damages another person's unit. So if they had a water leak and it ran to the person downstairs and they were found at fault for it, and the master policy didn't cover it, and they came to the individual unit owner for the damages, their liability insurance could extend and cover that damage as well. Same thing, you can put water back up. It's very less frequent, especially when you're up on a higher floor, for your drains to be the one to back up in the units. But it's inexpensive to put on at least like 5,000 or 10,000 in coverage. And then we put on what's called like loss assessment coverage. So if a master policy has a big claim, right, for like a roof damage or a common area damage, and they exceed the limits of their insurance policy, they can put an assessment on everyone in the building to cover the excess amount. So if it's $100,000 claim and their insurance policy ran out at $75,000, they could basically bill everybody else for the other $25,000 split up. Insurance policies for a condo can go all the way up to $50,000 in coverage for that coverage. So if our client was responsible for $2,000, the insurance company would pay that $2,000 difference for them. It does have to be an insurance related claim for them to cover it. It wouldn't be, hey, we're just deciding for maintenance reasons to upgrade something. And, if they did some type of assessment for something like that, that wouldn't fall under this. But if there's an insurance risk and they did an assessment across all the unit owners, you can have it. The minimum's $1,000 on most HO6 policies. So my advice would be, if anybody has an HO6, to increase that to the $50,000. It'll probably cost like $2 or $3 a year to go from $1,000 to $50,000 in coverage. And it's probably unlikely that it comes into play, but it could definitely save you a few $1,000s for just $2 more per year.
Okay, makes sense. And I know, so when we introduce somebody to you at the beginning of the process, hey, this person's on their way to closing, one of the great things you do for our clients is running a report of past claims on the property. Can you just tell us, like, how do you do that and why is it important?
Yeah, so once you go under contract on a property, right, you have to be under contract. You can't just go looking at other people's personal records on a house. But when you're under contract, when we run an insurance quote, it pulls what's called a clue report. So it's like a comprehensive loss underwriting report that'll show any claims from the buyer who's going to look at the house and see if they filed any claims over the last, depending on the options, 5 to 7 years. And then it'll also show on the address that they're purchasing any claims that have come up. 9 out of 10 times, there's no red flags, right? Every once in a while, somebody does have an insurance claim. It could be some wind damage that was, you couldn't prevent anything. It's been fixed. You can see the claim's been paid out. You can see everything's been upgraded. Even a fire in the house, to get the claim paid, most of the time you have to prove that the work's been done. You can see when you walk through the house that everything's been upgraded. What we're looking for is, one, anything really major, right? $100,000 fire. We just want to get it in front of the buyer's attention so they know what's going on. And two, if there's been consecutive water leaks, right? Everybody buying a house wants to know if the house they're buying has had 4 water insurance claims over the last 3 years for bad pipes or something like that. Then a home insurance inspector, or you can have a plumber, or you can get the details from the seller, whatever the route they want to take is. But it'll show us all that information if they filed an insurance claim and all of those consecutive claims came up or whatever it is.
Okay, great. And that's super important for us, because if there was a history of claims, we may or may not be able to do anything about it. The buyer might still be obligated to go forward with the contract. So I know that's one reason we always try to make that introduction really quickly,
definitely.
really early in the process. So, okay. I think we've covered a lot here in a short call. So thank you so much. Anything else that I'm not thinking of that we want to make sure our clients are aware of?
No, if anybody has any questions, you can always connect them with us. like I said, insurance rates are going up. So there's never a bad time to shop your insurance because it doesn't cost anything. There's no obligations and it never costs anything. So there's zero downside. And, you get your renewals in to take a look at everything and we can answer any questions.
Okay. Sounds great. Thanks so much. Appreciate your time, Dan.
Thank you.
All right.